What's up guys, welcome to the channel. Today we're gonna check out the 5 best stocks that you should buy in June 2020. And of course there's a little extra at the end. First one being Foot Locker. I mean, everyone is familiar with Foot Locker pretty much. It's a real known company in the world. They retail clothing, especially shoes, and yeah, you pretty much see their stores in every major city, every major mall, etc, etc. So Foot Locker, ticker symbol FL. You can see here I own 10 shares of them for almost $300, and that's pretty worth it. Let's see why. At the moment, Foot Locker is pretty hit by the pandemic because they had to close pretty much all their stores. And since malls are closed, they just can't operate yet. So the price of the stock went down quite a bit. But as you know, since time is passing by slowly and slowly, malls will soon reopen. And with that, we will probably see an increase into the price of the stock. So let's see here into a 1-year graph. You can see that the stock is pretty recent on trading 2 and 2, so we can't see the full picture here. But they were at around $40 before everything started, and yeah, right now it's about 28. I bought the stocks at less than 27, and I believe that the stock will go up quite a bit when malls will reopen. What's interesting about the company is that they have a really strong business. Everybody knows Foot Locker, and also if you see at the balance sheet, and they have so much cash on their own that they are able to actually slow down the rate at which they are losing money. They also have a really low amount of debt, which means that they are going strong in the future. They will still grow, and I really believe in this company. And what made me choose them over all other companies is that they pay a 6.29% dividend, which is great. I mean, 6.29 is a pretty good amount of dividends, and maybe it's a little bit increased because the price of the stock had to fall down a little bit. But yeah, either way, I believe in this company. That's why I own 10 shares of it, which is a huge part of my portfolio. So why should you not buy FL? Well, they have an uncertain future at the moment because we don't know when malls will reopen exactly. We don't know at which rate will they open. Like, will it be for every single store, or will we have to wait a little bit more, or will the corona situation still continue and well, they may go out of business? That's why you guys should always do your own research. I own this stock because I believe in it, but if you don't have to buy it. Do your own research, and when you know, you know. Next stock on the list with CCL, Carnival Cruise. This one is a little more risk involved because as you see on the graph right here, the price dropped so low. It went more to $68, but now it's down to $14.7. So really, they lost so much on this because just like Foot Locker, they could not operate the business for such a long time that they had to close everything, but they plan to reopen soon, so we'll see how it's going to go. But yeah, if you don't own this company, I believe that it's a great pick right now because the price is so low, and right now it's the best time to buy since they are so cheap. They lost a bit more than 60% of the value in just, you can see here, like in a few weeks, not even a few weeks, they lost more than 60% of the value of the company due to the corona situation, as always. So you can see that for myself, I average about $16.5 on the stock because I believe that in the future, it's just like FL, in the future I believe they'll do great when the whole situation will get better. I'm pretty positive about the situation. I believe that with time, we'll see things reopen, we'll see companies start again their business, and I believe that CCL has a lot of potential to actually come back to what they were, which is, yeah, more than $40, almost $50, so yeah. But of course, just like FL, and even more on this one, there is a lot of risk involved. If you want to buy this company for the long run, this might be a good play, but you should know that when you're buying this stock, you never know what it's going to do in the future, and they might go out of business because they have to stop everything for maybe a long period of time. And also something a bit negative about the company is that they recently cut the dividends, which means they don't pay you any more dividends if you buy the stock, which I am a dividend investor. So when I saw this, I didn't know if I should sell the company or if I should hold it for longer, but now that I think about it, I believe that this company will do great in the future. I believe they will go through this crisis because they already plan on reopening and starting new cruises. So yeah, we'll see in the future, but if you're interested in this stock, I believe that right now is the time to buy. Next on the list, Gilead Sciences, ticker symbol GILD. So Gilead Sciences is a company that is currently working on their corona situation by creating drugs and looking for something to cure it. They pay a great dividend of 3.57%, which is pretty nice for this company. They work in healthcare and they're currently working on a cure for coronavirus. I like this stock because, well, there's a lot of potential with everything that's going on right now, but also because I like the way they manage the company. Why do I love this company so much? It's just because they have 3 times more assets than liabilities, which means that they have 3 times more investments than liabilities is something that takes money out of you. So they have really a great potential to do great in the future, especially if they continue working on this cure for the corona now. You can see that I own 2 shares of them, and yeah, really looking forward to see what they do in the future. Next on the list, another small one, we're speaking about Facebook, ticker symbol FB. I mean, who doesn't know Facebook? I mean, everyone in the world probably does. But I'm not really speaking about the Facebook application, I'm speaking about the Facebook company. Because if you don't know, they own so many businesses other than Facebook actually, and some pretty big ones. They own Facebook, Instagram, Oculus, WhatsApp, Messenger, and all those companies are just Facebook. So first of all, they have a really strong business by owning all these amazing apps that everybody is using. They're making so much money. And you can see here on the graph for the max that they started at less than $50 per share and now is more than 220. And yeah, I believe that Facebook in the future will grow and grow. If you have a long-term view on investments, Facebook should be a really strong holding. But as you see on the screen, I don't own any shares of Facebook. Why? I just told you before that I invest in dividend stocks. Facebook doesn't pay dividend, which can be a negative for a lot of people. If you invest into dividend growth companies, Facebook is not part of one. But if you aim for a growth stock, I mean, Facebook is a great one. Something a bit sad is that we missed the lows here. It went to less than $150 and then quickly recovered to his all-time highs pretty much. But yeah, if you don't own Facebook and you're looking for growth stocks, this is a great one. Next on the list, Advanced Micro Devices, AMD. AMD is a tech company that's working with computers and a lot of other things such as the PS4 and Xbox One, and they probably do with the PS5 and Xbox, I don't know which one it is. It's a really strong business. They provide so many pieces of equipment, of tech equipment for so many other companies. And due to the corona situation, you can see that here in the last month, in the last 3 months, in the last year, they saw a great increase in price. Almost double, I mean more than double in 1 year. Because the usage of gaming just increased a lot due to everything that's going on, everybody being on lockdown and being at home. They're also doing a lot better than their competition. Their competitor is Intel at the moment. But if you aim for a company that will grow in the future, I believe they're not paying any dividends, just like Facebook, but that's not a problem for me. I don't own the company because I want to invest in dividends, but if you aim for growth stocks, AMD can be a really good solution for you. But wait, there's something about the company that I need to tell you. They have a PE ratio that is more than 100. What does it mean is that they have to spend more money than they're actually earning. Having a PE ratio of more than 100 can be a problem for a lot of companies. So you want to invest safely. AMD is a great company in my opinion, they'll do great in the future, but since they have such a high PE ratio, it might be a little bit too risky to invest into this company. If they can't fix the PE ratio, they will go out of business. So always look at those informations when you want to buy a stock, even if it's a dividend stock, because dividend stocks also have sometimes a high PE ratio. Okay, now don't tell anyone, but there is a 6th one. I told you at the beginning that there was one more stock that I wanted to talk about, and it's Delta Airlines. Ticker symbol DAL. Okay, here, let me explain why it's a bonus stock. It's a bonus stock for a few reasons. First, you can see that I started investing when the price was more than $45 and now it dropped down to half pretty much. So for my part, I invested in this company at the wrong time because, well, airlines had to shut down just as the rest of the world, and right now the stock price dropped super low. What is interesting about this company is that Delta Airlines is one of the biggest airline company in the world, so it means that they have a low chance of going out of business. But since they can't open yet, nothing is sure. They might go out of business, we never know. They used to pay a dividend, that's why I started investing in them, and well, the stock just crashed just after I bought it and they cut the dividends. So right now I'm in a situation where Delta Airlines for myself might be a sell option, but for a lot of people right now it's a buy option because they see a future in which Delta Airline, well, will just grow back to where it was, and that people can make a lot of money out of it. So this one we'll see in the near future how everything will turn, but in my opinion, for myself actually, it's more than a sell than a buy, just for the simple reason that I invested at the wrong time for them. And I don't want dollar cost average on this one for the simple reason that they stopped paying dividends, so there's no point in me continuing to invest into this company. So it's a risky choice, but if you manage your risk just like you should do, well, and you think that it's a great company to buy, just go for it. Alright, right now you can go and check out this video on how to start investing for beginners. And if you're new to the channel, if you've never seen me before, well, you should subscribe to the channel and put me a little like. That's always good for me. And I'll see you guys next Saturday for another video. Bye bye.